Hello everyone, this is Tim Davis coming to you guys from the Bullish Bears team. Today is now April 6th, 2019 on an early Saturday morning. And this video will be on my weekly long-term trade ideas portfolio update. So I'll be updating my portfolio with you guys as I normally do every week. So here we go. We'll get started with all my active trades. Okay, currently still holding shares of CTST. Again, still holding shares of CTST. And the share price of entry when I originally entered this trade was $8.57. My first target goal here is possibly $15. And I started buying shares around September 2018. Neo is a bullish position that I am still in. Into the 8-10 call debit spread, which means I bought the 8s and sold the 10s, expiring July 2019. July 19, 2019. Opened this trade on March 6, 2019. Break-even point is at $8.40. First target goal here is $9. ACB, a rural company, into another bullish position on ACB. Into the vertical call spread expiring May the 17th, 2019. So I bought the 9 strike calls, sold the 10 strike calls. Target goal here is $10 before expiration. Break-even point here is now $1.40 at expiration. Into this trade on March 29th, 2019. JD.com, JD, into the bullish position on this one as well. Into a short call ladder spread expiring May 17th, 2019. Into the trade on March 29th, 2019. So with this one, I sold the 27 strike calls and bought the 28 and 29 strike calls, which creates the short call ladder spread. Total cost per contract here was $161. My first target goal here is to see price action get to $32. Okay, next position I'm in McDonald's. I have 2 positions in McDonald's now. The first one I have is I entered a short call ladder spread expiring June 21st, 2019. Into this trade on March 27th, 2019. I sold the 180 strike call and bought the 185 and 190 strike calls. Total cost of this trade was $185 per contract. Sorry. First target goal here is to see price action get to $195. Okay, my second McDonald's position that I'm in, I entered a vertical call spread expiring May 17th, 2019. Entered this trade on March 21st, 2019. And I bought the 185 strike call and sold the 190 strike call. Break-even point here at expiration is $187.61. Total cost of this trade was $261 per contract. Maximum profit potential here is $242 per contract. First target goal is $190. Into the bullish position on AMRN. Into the vertical call spread expiring June 21st, 2019. Enter this trade on March 29th, 2019, paying $42 per contract. I bought the 21 strike calls and sold the 22 strike calls. Break-even point here is at expiration is $21.42. My target goal here is to see AMRN reach $23 per share. Next position I'm in is Disney, DIS, and bullish on Disney. Into a vertical call spread expiring May 17th, 2019. Into this trade on April 4th, 2019, paying $189 per contract. I bought the 115 strike call and sold the 120 strike calls. Break-even point here is $116.89. First target goal here is $117. This is strictly playing momentum and trend action or trend direction on this particular position. Next position is BB, which is Blackberry. Into the bullish position on this one. Entered a vertical call spread expiring May 17, 2019. Entered this trade on April 3rd, 2019, paying $31 per contract. Bought the 10 strike call and sold the 12.50 strike calls. Break-even point here at expiration is 10.31. First target goal is $11. Twitter, TWTR, into the bullish position on Twitter. Entering a vertical call spread expiring June 21st, 2019. Entered this trade on April 3rd, 2019, paying $49 per contract. Bought the 34 strike calls and sold the 35 strike calls. Break-even point here at expiration is 34.49. First target goal is $35. SOLY. This is a company that they just had recently IPO'd. So I started buying shares because I like the movement and I like what the company type of field that the company's in. It's in the medical field. And the shares started trading. When they started trading, I've been watching them since they opened. I want to say it was a couple months ago. And these shares have been trading pretty well since the IPO. So I started buying shares. Started buying shares April 1st, 2019 at $8.75 per share. And solely pretty much stands for Soliton Incorporated. It's an early stage medical device company which focuses on developing and commercializing products using a proprietary rapid acoustic pulse technology platform. It offers a device for the removal of tattoos. Pretty unique. The company was founded in 2012 and is headquartered in Houston, Texas. So this new IPO definitely does look interesting from what I saw so far. Into the bullish position on BAC, Bank of America. Into the vertical call spread expiring May 17, 2019. Into this trade on 4/1, April 1st, 2019, paying $90 per contract. Bought the 28 strike calls and sold the 30 strike calls. Break-even point here is $28.90. At expiration, the first target goal here is $30. And last but not least, XOP. XOP into the bullish position here, entering a vertical call spread expiring April 5th. I'm sorry, I entered a vertical call spread on April 5th, not expiring April 5th, so let me correct that. Entered a vertical call spread on April 5th, which expires on May the 17th, 2019. Bought the 31 strike call and sold the 35 strike call for a cost of $135 per contract. The break-even point here is $32.35. At expiration, first target goal here is $33. And we'll get into some of the charts. And since I'm currently looking at XOP, we'll take a look here at this one. So the first target goal is $33. Let's see where we're at now. XOP, still got a little ways to go. Looking at the daily chart, which is what I like to concentrate on with these longer term trades, daily and the weekly chart. It was range bound for quite some time. Once it had this initial pullback to 23.89, pretty much got a nice bounce there, back above or right just around, hanging around at 61.8% Fibonacci retracement level. Has not gotten back above the 50% Fibonacci retracement level, which is what I'm looking for in the very near future. So we've been range bound around at 61.8, and now price is right at 31.81 at the close on Friday, with a big bullish green candle on Friday. So I'm looking for this momentum to continue to pick up. TTM squeeze definitely looks like it wants to continue to pick up momentum, like it's starting to get stronger. And a TTM squeeze on a daily. And this weekly chart is what I like the most. You see all this consolidation action since this big pullback from October of last year. Nice jump up right around that 61.8% Fibonacci retracement level. It has been hovering just below the 20 EMA. Looks like we're ready to cross above the 20 EMA on a weekly. So the next 2 weeks in this thing can really be crucial and can really send this stock higher. TTM squeeze definitely shows that the downward momentum is slowly but surely losing steam, as you can see with the representation of the yellow bars starting to form or starting to decrease and get smaller in the TTM squeeze. In the MACD, you see this bullish crossover down here with this blue line crossing over this the gold colored line, and the blue line is starting to turn up. So that is all bullish action that is being displayed right now within the technical charts. Okay, moving on to the next one. All right, so let's take a look at, let's see here. Let's take a look at Bank of America. Bank of America entered a vertical call spread on this one, and my first target goal here is $30. So I got until May the 17th for this thing to play out. So let's see where we're at now. BAC. So we're right at 29, just about $1 before our first target goal here. What I like about this one is that it actually made it back above its 50% Fibonacci retracement level from this recovery rally, and didn't quite get to 61, and it started to pull back, drop back below the 50% Fibonacci retracement level in the beginning of the year, but it's back above it now, and we're hovering right at it now. So what I'm looking for is a continued move above this 50% Fibonacci retracement level, possibly back to that $33 price level that we've seen back in April of last year, around March, April of last year, looks like. So this is the weekly chart that we're looking at. Now take a look at the daily. Daily chart. A couple of things I'll point out here. TTM squeeze looks to be gaining momentum. The downward momentum is like it's getting weaker, and it's like it's ready to turn bullish. It's a bullish crossover in the MACD as well. And parabolic SAR starting to form on the bottom of the price action. And it's like the 20 EMA is just below price action now and looks ready to turn up. So this one still looks very bullish. So we'll probably see that $30 price action in the very near future. Okay, and that's my look at BAC. Moving on. Okay, let's take a look at this chart of this IPO, SOLY, Soli. Show you what I mean when I say this chart looks pretty strong. As you can see, since it IPO'd, we can see it's back in February. It flatlined for a while, and then all of a sudden this thing just started marching higher. At around the middle of March, it just started going up. Couple days of pullbacks here, but it stayed above the 20 EMA. Hit the 20 EMA area and went right back up again. So this thing is still looking strong. So on these pullbacks like this, what I'll probably just continue to do is add shares, as long as we continue to stay above the 20 EMA. I kind of like the way this thing is moving. Okay, it got up to as much as 1184 on Friday. That was a big push. Then it pulled right back, but that's a big push on Friday. And that's on a daily chart. So in the weekly chart, you can see it's just been showing its strength right here. So it looks pretty good for now. All right, moving on to the next one. Okay, let's take a look at Twitter. So Twitter here, this doesn't expire. This position doesn't expire until until June of 2019, June 21st. And my first target goal here is $35. So let's take a look at Twitter and see how close are we to that first target goal. Not far away at 34.72. So this thing is looking good. So we could probably ride this for a while. What I'm really interested in is for Twitter to create the same type of have the same type of breakout that McDonald's did. So I've been watching Twitter for quite some time, maybe over a year or two, and what I was able to map out was this particular pullback. And when it pulled back, this drastic pullback from $47 back around June or July of last year, it kind of settled right up, right around this level here, right above this Davos, this bottom of this Davos box. So stayed within a range. On this left side over here, you see there was a range. Price action pulled back too, and it's been in this range and pretty much wedging in this range. So what I'm looking for is a possible breakout above this range. That's what I'm looking for. We'll see if that actually happens or not. So a break above $35. That's what I'm really looking for. Breakout. And as you can see here on the daily, we have made it back up to the top of that trend line that I drew. And we stalled out there. So we'll see what happens on next week. See if we can get above this trend line. So that's the ultimate goal. Get above that trend line and really break higher. Go towards this 35, then 36, 37, top of the Davos box. All right, let's move on to the next one. Okay, Blackberry. Blackberry, our goal here is $11. Let's see where we're at now. This one doesn't expire until May 17th, so we got some time left. And this one really needs a push because we are nowhere near 11. We're at 9:32 right now, and we have almost a month and a half left to get this move, to see this move happen. Now, looking at the weekly, you'll see how it looks like a nice turnaround story. We had a pullback here around last year. We pulled all the way back down here. It's now around 633. Excuse me, folks. And since then, we've been marching higher. We finally made it back above the 20 EMA. Looks like that is starting to become a support level, that 20 EMA area. So, like we're holding that support level now. Had a down week on last week. This week we just came out of. Had a down week. You can see. Got this big red candle there. So, represents a pullback week. But if you take a look on the daily, you'll see how we're resting right above the 20 EMA, which is a good thing. Drop below it here on this last pullback back in the end of March. Drop below it, but we quickly jump right back above it, and we pull back right at it now. So we'll see how that pans out next week. I think Twitter may have some legs to grow here. All right, moving on. I know I just said Twitter when I was referencing Blackberry, so the Blackberry like it has some more legs to grow here. So Disney is the one I really want to be looking at because this may be in store for a good breakout, just like McDonald's. First target goal here is 117, so let's take a look. And I got this until May 17th, so I need this thing to move fast. So this is a new one, and take a look at this chart. You'll see what I'm looking for is the same thing set up like McDonald's. And I'm going to show you guys McDonald's in a second. So I'm looking for a breakout. This is what you see here on the weekly charts. How it's been trending within a range for a very long time. Since 2017, it's been snaking up and down within this ascending triangle pattern. Looks like we're getting close to the end of this ascending triangle and maybe gearing up for a breakout. So that's what the weekly chart shows. Take a look at the 15-year monthly. This is what you'll see. You'll see how well defined this ascending triangle has been for a very long time. And looks like we're getting very close to the end here, as you can see. Has another earnings report coming up. As long as we can stay above this trend line, I'll stay in this trade. Next earnings report looks like it's going to be around May 8th. So that event could send this thing and catapult it out of this trend line, or we can get out of it soon. If we break above the trend line soon, then I can take profits a little earlier before the actual earnings event. So that's what the monthly chart looks like. Now we'll break it down, take a look at the daily, and we'll be finished with this particular review of this position. Alright, so on our daily chart, TTM squeeze shows, and you can see on this daily chart, look at this. You see all this volume. When we had a big pullback around March the 18th, big pullback. All this volume. Look at these volume bars. These volume bars were getting. A lot of volume started pouring in here after this pullback. During this pullback, a lot of volume. Then you got a lot of green bars that are pretty much longer than the ones you see on the left side of all the red ones. Just a lot of volume. A lot of volume was pumping in here last week. So I think this thing is gearing up for a big breakout. So we'll see how that turns out. But I think it's gearing up for a breakout. When you look at some of the recent action here within the option chain, you can see how a lot of calls were being bought. A lot of calls are being bought. It's like and taking a look at May specifically. Look at this one right here. I just noticed this one today, just now. Look at this one. These are single calls. The 120 strike calls. So they've been scoffing those up. So Friday it was made a lot of purchasing on Friday. 22,000 contracts versus the 16,000 open interest. That's big time unusual volume. So I think we got this position at a very good time, and I got in a little early. So there's a lot of action with this Disney. It's a lot of action. So there is somebody expecting a big move in Disney, and I may even hold this thing through earnings. It all depends on how this plan plays out. So looking at the April contracts, let's see what this April monthlies look like here. Some action here too, not as much as the one in May. Taking a look at June, some action here in June too, but not as much as the one in May. Even on June, you see some put action, a lot of put action. There was a lot of put support, and I don't know if that was just somebody hedging against a bullish bet or what, but because it's the same exact amount almost. So looking for Disney to get a pop soon. Then I'll definitely be out of that position if we pop above 120. So that's my look on Disney. Moving on. Okay. Let's take a look at AMRN. This position expires June 21st. First target goal here is $23. This thing has been very volatile, so it's been all over the place. AMRN. That's why I definitely wanted to stretch this out a little bit longer. This has been very volatile, but TOS does. I like what TOS does here by mapping out and showing you when it's a pattern is forming. So this is an ascending triangle. It was just a ascending triangle on a daily chart, just like McDonald's and Disney. So it's in this ascending triangle pattern. So it's creating these higher lows and keeps getting up to this point around this $23 level, close to it, and pulling back. As we did back here in November of last year, got up to that $23 and it was rejected. Hit it again up here around March of this year. It was rejected. Back to a low, but it did not create a lower low. Then we got a bounce again, and as you can see, the TTM squeeze, the downward momentum is losing steam. and the bullish momentum is trying to pick up action, pick up steam. So that's what the daily chart looks like. And if we look a little bit closer, let me stretch this out because I got the Fibonacci lines drawn in here already. I love looking at this, seeing where the 50% Fibonacci retracement level is after a pullback. So right here, as you see, we made it back above the 50% Fibonacci retracement level, back up to 78.6, and pull right back to the 50. That is a nice move to see and watch. If it can hold that, because normally that 50 line, when you get to that 50 line of a Fibonacci, that's normally a decision point. Either it's going to catapult higher, or it's going to continue to go lower. And my theory is, I think this will definitely get a bounce off of this 50. Just by looking at price action in the past, and you look at the TTM squeeze. So I think it's almost ready for its move higher. And all I'm looking to get to is 23 bucks, and then I'll be ready to take profits on this trade. So that is AMRN. Now let's take a look at McDonald's. MCD. So MCD, I really believe McDonald's in the near term could soon see 195, maybe even 200 bucks. So I'm willing to continue to ride this up and down wave in McDonald's. Already got what I was originally looking for on the weekly chart. I was looking for a breakout above this trend line, above this triangle trend line that I've been monitoring for over a year. Same thing, sneaking in and out until, and every time it got back up to the top of this trend line, it would get rejected. Got up here, right here, got rejected. Here, got rejected, and then all of a sudden, almost to the end, it catapults and breaks out. So I'm looking for some continuous strength for McDonald's to the upside. I'm looking for McDonald's to actually get to around the 195 in the near future. That's what I'm looking for, and possibly even 200. I think McDonald's has the ability to get to 200 or higher. So as you can see, we've been, marching higher, up and down. I think in the near term, maybe on Monday or Tuesday, maybe see some pullback here. I think that that trend line is going to be definitely intact. The one we pulled, one I broke out of about a week or so ago. So we're well above that trend line now. So we should stay around this 190 level, 188 to 190 level for a minute, and then we should continue to go higher from there. That's my outlook. That's what I'm looking for Disney. I'm sorry, for McDonald's. All right, so I got two contracts there, two different type of contracts. I got a short call ladder, and I have a vertical spread, and they're both doing very well, and both well in the money now. So I can take profits any day, but I think this thing has a lot of much more room to run. So when you got big profits, playing with house money now, let the winners run. Next one we'll take a look at here is JD, JD.com, and my first hard goal here is $32. So let's see how JD is doing. I think it may be time to take profits on JD. Oh, no, not yet. We're not at 32 yet, and I think we have the ability to get there. So I'll hold this a little while longer. This thing has really been running recently. And let's take a, if you look at the daily chart, you can see this big run has been on for quite some time. So it's been slowly but surely creeping higher. You can see this well-defined trend line. Stair step of the Davos box. Up to the top, down, then back up to a new one, down, up to a new one, down, up to a new one, unless we're trading back and forth now. We may be ready to break out to a new Davos box in the near future. So I'll continue to hold this one for a while, as long as I got time left. I really like the weekly and the daily charts for continue to move higher, and possibly even a move back up here towards 50. That would be a very good move. That could probably take a couple months or so, but for right now in the near term, just looking for a move back above the 50% Fibonacci retracement level and possibly be able to hold that level. So I'll continue to hold JD.com for now. And what's next? ACB. marijuana stock, a royal company, ACB. Since I drew this trend line, it's been nicely holding above the trend line on the weekly chart. Every time we get a pullback towards this trend line, we normally get a bounce. So we are back towards this trend line now. So I'm looking for a bounce here in the near future. Yep, so I'm definitely expecting a bounce here in the near future. If this bullish momentum wants to continue, we have to see this bounce come soon. On the daily chart, we're hovering right above the 20 EMA, and we're right above the trend line that I drew a while ago. So it's behaving well. We just need to see that bounce next, right off the trend line and right off the 20 EMA, and I believe we're going to get it. So we'll see how ACB continues to form and shape up. Next one, NEO. This has been the most stubborn one of all. That's why I gave myself until June. So this one had a big pullback, but on the daily chart, looks like that big pullback probably just gave it some momentum or some fuel for a big bounce. So I need a real big bounce in order for this thing to get back up, even towards that $9 or $10 level. So got to July, so I'll be in this position for quite some time. But as you can see, the TTM squeeze, the momentum in the TTM squeeze is dying out. The downward momentum is dying out. So I'm still bullish on this position. So that's NEO. Now let's see if I can actually see CTST on here. CTST shares that I own. Been purchasing these shares since last year. This also had a funky pullback, and what I don't like about this one is that it dropped below the 50% Fibonacci retracement level. So let's see if this thing can hold this level here, right above the 38.2%, and go back up. And it's below the 20 EMA on the daily, so don't like that. Hopefully, we can this price action will regroup and regain that 20 EMA in the near future. But luckily, I own shares, so, and I'm still, want to hold those shares for maybe a couple years. We have to see how that pans out. As long as the marijuana sector stays strong, I'll continue to hold these marijuana shares probably for years to come. All right, folks, that is my weekly update video on all of my positions. I went through every chart, broke down what I see in the chart. So hopefully, that was a good explanation as to why I'm in these positions and what my expectations are. All right, until next time, you guys, I will see you guys next week in the trade room. For those of you guys who don't really follow us, please visit our website, www.bullishbears.com. But I think everybody here may be members, so share it with someone else. Let them know what we're doing. Let them know the things that we try to continue to feed the community so that you guys can be successful as well. All right, have a good day, folks.